So today we're going to look at Disney stock. A lot of you guys have asked me to do an update on this one, and today we're going to do that. So Disney currently has problems, but the big thing we're going to look at is these short-term problems, or are these longer-term problems, which would be the bigger issue, and that's me as a shareholder saying this. Now personally for me, when I bought Disney, I always looked at this as a bit of a Netflix, but then you have the bolt-on of the actual parks, which are going to generate steady revenue but a lot more profit. And if you can have the combination of Netflix and also these parks that are generating revenue and profit, it could be Disney with these amazing, Netflix with these amazing bolt-on parks, and it could be a really good business to own. So that's what we're going to look at today. Hope you enjoy it. Let's get started. And by the way, if you're on the Patreon, there is a new exclusive video up there, which is the US portfolio review for June. So if you do want to see that, the link is in the description, or if you're already on there, you could go watch it. And as well as 2 exclusive videos a week, there's also a Discord with 500 members on to talk about stocks, obviously one of them being Disney. Now let's get started just with Disney. So as you can see here, Disney, really since 2021, the stock did hit around about that $200 mark, and then it has been coming down, and it hasn't really joined in the market rally that we've seen recently. Disney has kind of been slumping down more and more, and that's a key indicator that people aren't happy with the stock at the moment, and that's why the stock price isn't doing well. So what are the kind of reasons for that? Well, a lot of the focus is around Disney Plus and kind of what direction are Disney going on at the moment, and what is the longer term story for Disney Plus. So Disney Plus was launched in November 2019. Obviously this was Disney to have their version of Netflix. Obviously using their content they thought they could have a very good streaming service. Now the key thing is they launched this in 2019. This was a really key year because, as we know, as we got into the next year, 2020, everybody was kind of sat at home, and it worked out perfectly that people started joining Disney and their streaming platform right when they just started. So without doubt, the timing, even though it wasn't planned this way, was absolutely amazing. So they had a massive surge in subscribers. And you can see here how rapid that subscriber growth was. Very quickly, Disney, as a platform as a whole, obviously Disney Plus isn't as big as Netflix yet, but when you add in Hulu and ESPN, Disney as a whole as a streaming service actually is now bigger than Netflix. Now you consider that Disney and Disney Plus has only been existing for around about 3 years, Netflix has been over 10 years. To get to them sort of levels so quickly shows you how much of a boom Disney has had to catch up with the likes of Netflix. So they have had a lot of demand pull forward. And now the big concern in the recent earnings on Disney was around the Disney Plus numbers, because they were starting to show a little bit of signs of weakness. Now you got to remember that Netflix has had these signs of weakness for a while. This is actually potentially the second consecutive year in 2023 where they could actually lose the amount of subscribers they have. Netflix has had this for a while, and it seems like, for me, it's a bit of a cool down for all the demand that was pulled forward in the CV situation. Disney, when Netflix started having these issues, Disney didn't really show that. They were still growing rapidly. So Disney to only just start having weakness in the subscriber growth, I think is okay, because Netflix has had this up for a while, and everyone's kind of got over the fact of having weaker growth now. You know, their share price has gone absolutely crazy. So I won't worry about this too much, that Disney is showing weaker growth or subscriber additions. And also, if you look here, Disney's domestic Disney Plus average monthly revenue per user actually increased from $5 to $7.14 due to price increases. So even though the subscriber growth is weaker, they're actually charging more, so they're actually still increasing the revenue. So once you kind of balance out the people that go, oh, you know, I'm not paying that higher rate anymore, then that's fine, because the higher prices are kind of covering that. So you can understand why there's a drop off of user additions when it's okay when the prices are going up. If we didn't have the prices going up, then that would have been the issue. Now, if you actually look in the recent earnings, the revenue growth was actually okay. You know, the company was growing 13% year over year, and you can see here the profit was rapidly higher as well, and obviously a lot of that's to do with the park openings as well that's kind of going on here. And you can see here the parks were 17% year over year growth, and this is what I mean, the parks alone is a very attractive business. And you can see here the operating income as well was up 23%. So you got a major, which will probably slow down to more single percentage once these still CV situation numbers have resolved themselves, and also the income side of it. This won't grow at these sort of levels for a while, and that's why it's key for the Disney Plus platform to get back to growth. But if you actually look at the direct to customer, and this is Disney Plus, you still hear that like it still grew 12%. So even people saying like the Disney Plus platform's weak at the moment, it's still growing 12% year over year. And I think the user growth will come back once these the people that have seen the price hikes and gone, oh, I'm leaving. Once they're gone, I think we'll see, go back to user growth. And even so, people making a big seeing out them losing subscribers. You look here, it's actually still up 12% year over year. And you'll see here the losses are coming down. The losses were better by 26%. But as you can see, they're still losing a fair chunk of money. And it's 659 million loss. Obviously, that's something that we still need them to get to profitability. Now, for me personally, I don't see that much of an issue in the numbers itself at the moment. I think a bit more is that people are understanding where the direction is going to be in the longer term. And what I mean by that is, previously we had Bob Chapek, who came in as the new CEO. He came in as a new CEO in 2020, obviously right before the CV situation. And I actually think he did a good job. People say he's the reason why Disney stock isn't doing well. I actually think he was actually doing a pretty good job. The share price went to all-time highs. Disney Plus grew absolutely rapidly, and we knew the long-term game plan for Bob Chapek was to get the parks going, but to grow and grow and grow that Disney Plus platform, and then it will get to profitability. The problem is Wall Street didn't like that, because in that time frame, what did we have? We had Wall Street where they went, we like job cuts, we like profitability, and that's what Disney was not doing compared to the old business model, which was, and eventually with a bit of pressure from the board and Wall Street, they decided to get rid of Bob Chapek. In comes Bob Iger. Bob Iger, who was in before Bob Chapek, came back in, and straight away there was a reaction on the share price. However, since then it has given it back. But in my opinion, since Bob Iger has come back, there's a bit more uncertainty around where the company is going. And that is, for example, the cuts. Straight away, he went straight for the cuts, what Wall Street have been liking. They've been cutting major amounts of jobs. But same again, a lot of this is in the entertainment business, and you're thinking, well, why are you cutting a lot of these jobs when you're wanting the Disney Plus platform to be one of the big growth drivers for the company? That kind of throws up a couple of red flags. The other thing with the likes of driving up profitability. So if you're not spending as much on the content, for example, and attracting people into the Disney Plus platform, if you're focused on profitability, which we do want profitability, but we don't want to lose profitability on the expense of growth. It's a fine line to kind of balance here. That's a really tricky thing, but we don't want them to sacrifice all growth. We don't see Disney Plus go to flat growth just to drive up profitability by 2024. The losses are coming down nicely, but we don't want to see these losses instantly go away overnight, but then cost us the growth on the Disney Plus side. And then comes the confusion on the dividend. Automatically we start talking about potentially, well, they said that they're going to bring the dividend back in 2024. Now the problem is that you're cutting the jobs, you're cutting potentially the growth of the company to drive up the profitability, but then you do that to bring back a dividend. Well, the problem is that you've had, previously to 2020, you've had mostly dividend investors that want a steady stock with a steady share price performance. That's all well and good. But the problem is now with Disney Plus, you've trapped in a bit more of a growth investor, and you've taken your dividend away since the whole CV situation. You then go from all these growth investors that want the Disney Plus parks, but then this growth driver of the Disney Plus platform, and then you say, well, we're actually not going to put the money into that, and also we're going to go back to dividend. Then you're going back to all the investors that used to be back in the company, and it's trying to attract different investors, which is a really tricky thing. And the thing is, well, when you go into paying a dividend, if you start getting back up to the profitability levels here, you can see that the forecast, 4 billion in profit up to 8 billion profit by 2024, which will be getting a bit closer to the 9 billion that they were doing. I think I said million before, billion. What they were doing before the CV situation. That's all well and good. But then you've sacrificed your growth, and then you go back to paying this dividend, and then you look at the balance sheet. A big thing with Disney, if you do go back to this profitability, start paying that debt down. There's a lot of debt on the balance sheet, start paying that debt down, which has been through, major acquisitions that they made, which has helped the share price through this period of time when they were buying brands like Marvel, when they're buying brands like Star Wars, for example. It did really help the brand do very well, but don't just sacrifice all that to pay a dividend, for example. And then that leaves the next question is content-wise. If they're cutting funding for content, also content as itself from Disney, kind of leads you to the point, like, what's next for Disney? Because you look at the content, and I think in the last year, I would say Disney has fallen a little bit behind on the content side. You know, the big storylines with Star Wars have come to the end, Marvel's come to the end. You know, Disney's looking for the next major shows to drive up the views, and they've got to bring out the correct amount for the movies, but also the same amount for Disney Plus. And you look at that time frame in a year for Netflix, they brought out the brands like Wednesday, for example, Stranger Things with another series. They've been actually doing quite well on the content side of it. So I think there's also the pressure of, like, Disney itself has fallen into a bit of a slump at the moment with content, and also some of that content in the movies they're bringing out have been actually quite controversial as well, which obviously is still not a great thing to be doing. So you got all these combinations of where's the direction of Disney. Where's Disney Plus going? What's the growth going to be at? And also a gap in the content at the moment. And personally for me, I bought Disney because I wanted the parks, I wanted the Disney Plus, and I wanted to see Disney growing at 7, 8, 9, 10% a year. Now the problem is that if Disney is then growing at 2, 3% a year, that's a total different ball game, and you're trying to value Disney then off, 2, 3% a year, and what sort of investors that would attract. I don't think that would attract an investor like me. So that's the major battle that's going on with Disney, and that's why the share price is a bit stuck, because investors in general, is this stock for value investors, at 40 times earnings? Is it for dividend investors, which isn't currently paying a dividend, but is going to pay a dividend? Is it for growth investors, that is a stock that is currently growing really well, but are they going to then sacrifice the growth to get to profitability? No one really knows, and this is the problem where Disney's at the moment. Now, personally for me, as a shareholder, I would like them to be the stock that does grow high single digits with good profits driven by the park business. And we've got to see if that does play out still. And I think that's what a few people are kind of worried about at the moment. And I think that they still will get to that. And I think when you do look at the content they do have and the IP that they do have, I think they'll be okay. I think they'll be able to reinvent themselves and get back to bringing out very good content, but without doubt they're in a bit of a slump at the moment, and it's going to be down to Bob Iger to get back to his old glory days where he did get the share price to perform, absolutely amazing when he did used to be in charge, and the shares did go absolutely, were a very good one to behold, and did massively outperform the S&P in that SP 500 in that time. There is a few issues to be resolved. Now, I would back Disney to do it because I think they've got the content, they've got the IP to do it. They've got the proven history there to do it, and I do think there's a bit of a slump with the tough numbers through Disney Plus at the moment. I think they will reinvent the content going forward, and I think they will get it right with the amount of growth while driving up profitability. But those are all the issues that investors are having to deal with at the moment, and which investors does Disney apply to? Because it does seem to be in a whole kind of, is it a growth stock? Is it a value stock? Is it a value stock? It seems to be struggling to come under the bracket that it's trying to be at the moment. So I still believe in Disney, and I still would back Disney, and I would not back against Bob Iger to sort this business out. But there is a few issues at the moment, and that's where Disney is at the moment. But like I said, for me, I still think the short-term issues, and I think in the long term it'll still be okay. But that's currently what's kind of going on at the moment. So yeah, I still back it. You can understand why there's issues here at the moment and why people are a bit unsure on the stock, but I think they'll be okay anyway at the moment. So hope you enjoyed the video anyway, guys. Catch you in a bit.